Welcome back. UAE markets underperformed their peers in the GCC region last week and again this week kicked off with a very lackluster trading session on the DFM and the ADX. Trading volumes are low due to investors waiting for the fourth quarter earnings season to start this week. So to take a look at the upcoming reporting season as well as get a feeling for the overall market sentiment, we are now joined by Marwan Shurrab, Vice President and Chief Trader at Gulf MENA Alternative Investment. Hi Marwan, how are you?
Hi,
Thanks for coming in today.
Thank you.
Tell us, the reporting season is going to kick off this week. Or how high are expectations at the moment with investors?
Well, reporting season coming in is going to be mostly showing figures for 2010 as a whole. So across the sectors, different sectors that we're seeing, mostly it's going to be negative growth between 2010 and 2009, and that's mostly expected. Some exceptions might happen with regards to the banking industry, where we might see lower provisions than expected, and that would help profitability highly due for 2010. Also, investors will be very interested in the banking industry, especially looking on loans and deposits, like growth ratios for 2010 between 2010 and 2009. And that's what's going to give us more indication on how the markets would react going forward in 2011.
Tell us a bit more about provisions with banks. They've picked up quite a lot in 2010, haven't they?
That is true, yeah. In 2010, we've seen high provisions for mostly the bad debt that was sitting on the balance sheet for most of the banks. We had the likes of Saad & Khosaibi, we had Dubai World itself, we had a lot of companies that were restructuring their debt with the banks, where the banks had to take provisions for these restructuring and make sure that such big losses would not affect going forward the interests of the shareholders in the banking industry.
So we're going to see that in earnings.
Yeah, of course, yeah.
You just said it, many companies are restructuring their debt, they're issuing convertible bonds. How much is that a drag to the overall market?
This is always something concerning investors. This increases the ability of, or the probability of dilution for shareholders at current levels. We had two major announcements at the beginning of 2011. It was Adar and Arabtech, but they were very different if you look at them. Arabtech's conversion or convertible bonds that they discussed that they would like to issue is towards expansion outside of the UAE and lessening their dependency on the UAE market and going towards the region as a whole. It will still cause shareholder dilution for current shareholders, and that's why we saw the market react negatively since the beginning of the year. UAE markets are the only losing markets in the GCC. They're down almost 2% each, Abu Dhabi and Dubai, since the beginning of 2010. You have on the other side Adar, where we had also a convertible bond being issued or will hypothetically be approved soon in 2010. And that's mainly for restructuring debt. Most of it was due to lack of liquidity in 2010 and high debt obligations that they had to face with the amount of almost 10 billion dirhams. That was a lack of shortage. So they had to issue something for Mubadala, and that will also cause shareholder dilution. And that's also why we're seeing aggressive selling on Adar since the beginning of that announcement.
We recently had reports out that Nasdaq Dubai wants to lure investors by making everyone who holds an IPO to actually reserve 10% for retail investors, people like you and I. Do you think that's really going to work?
We've seen a bigger announcement in 2010 where we saw Nasdaq Dubai and Dubai DFM combine forces in operational, if you may say. That didn't help attract liquidity as much. That's mainly due to the lack of interest from international fund managers or international hedge fund managers even to go for high-risk off-index bets at the current time. UAE markets and in the regional markets, not only UAE markets, are facing lack of liquidity, and that's mainly due to their positioning internationally as frontier markets, not emerging markets. Of course, with going forward in 2011, UAE regulators are looking strongly for upgrades for the UAE markets from a frontier to an emerging market on the MSCI. That would help a lot liquidity because it would make fund managers internationally allocate a certain percentage of their funds towards the region here, even if it's extremely small. Let's say they get a percentage of a 0.3% in the MSCI emerging. That is still a percentage for a big chunk of money that is internationally trading across the world.
Please clarify again to me, why are international fund managers not so interested in the UAE?
It's because it's an off-index bet at the current time.
So what does that mean?
It's not on the emerging market index. It's a frontier market which is outside of the constituents of the emerging market index. Like even if they are emerging market funds like international emerging market funds, they wouldn't be obligated for investing here in the region because it's not even in the index. It's a frontier market. So that's why mainly we're not seeing high liquidity. High liquidity, we see it in our markets where we reached a 2 and 3 billion turnover per day in DFM in 2008, was mainly in the peaks of international markets and regional markets. It's where we see an appetite for people going off index to make the extra alpha. At current time, due to the high risk and due to the low expectations of performance internationally, due to, of course, the restructuring that we saw in most international firms and international markets, that all caused fund managers to lack their interest in going towards a riskier asset, which is seen as a frontier market.
UAE markets,
yeah.
Okay. Tell us, which sectors do you like in the MENA region at the moment, and where should investors better keep their hands from?
If we're looking at the MENA region as a whole, obviously infrastructure and is not going to be the main sector to look at currently due to all the problems that we're seeing. Sectors that we really like at the current time are telecom sector, petrochemicals, which is linked highly to oil pricing, which is also in its way linked to the euro gaining strength against the dollar. That will all feed into the petrochemicals sector as a whole and benefit these companies in profitability and in dividend yields going forward due to the dividends that they will be sending out. There's also the banking sector, as we discussed, which is going to be a very important year for them because as we go towards mid-2011, we would start having a more clear picture on the size of the provisions for 2011 and the expected provisions in that side.
What's your outlook for this year for the UAE markets?
The UAE markets, as we said in the beginning, it's mostly negative growth across the sectors, with the exception of certain utilities, logistics like Amex. You would say also with Salat, which is really attractive at current levels due to the high dividend yield that they would see going forward in 2011.
Thank you very much for coming in today, Marwan. Have a great day.
Thank you.
Now it's time to take a look at the GCC markets, which ended mixed today. Coming up now, let's take a look at various currencies against the dirham, followed by the price of oil and precious metals. Well, that's it from the business desk. You can contact us at news@city7tv.com. Up next, Laura Buckwell is back with the news.